Okay, so by the end of the video today, you'll be able to book accounting transactions by yourself for your own business. This is my promise to you. This is the goal of today's video. So what we've learned last time is that accounting, it's simply the process of recording, summarizing, and reporting financial information. And the way that we do that is by recording financial transactions. In accounting, the way that we record financial transactions instead of grabbing pen and paper and writing it down is by using a credits and debits table. And when I say debits and credits, most people get scared, but what I'm gonna do today is I will show you in real time, live, how to book transactions using debits and credits using an accounting software, and how the transactions that we'll be booking converse, how they flow into the top 3 financial statements: income statement, balance sheet, and statement of cash flows. Let's get going. So right now, I created a test, a learning QuickBooks account for Olivia's copywriting. And we will be booking the first month of Olivia's operations, which is September, using journal entries. Those are the transactions that I will be booking by utilizing the concept of how debits and credits affect an account, how they affect the 5 types of accounts that we've learned: assets, liabilities, equity, revenue, and expenses. Also, after booking the transactions, you will see how the transactions flow into financial statements, how the transactions that we're booking will affect the income statement, the balance sheet, and the statement of cash flow of the business. So we can start, not fully, but we can start understanding how to analyze those financial documents to make informed business decisions for ourselves. Before we go there, let me tell you a little bit more about who Olivia is. So Olivia is this fictional character, just made her up, but for the sake of her bookkeeping, we need to understand. Olivia is 27 years old. She lives in New York City. She lives on the Lower East Side, and she's a copywriter, but she's a staff, a W-2 copywriter, and she does quite well for herself. She makes $150,000 a year. And Olivia has always wanted to open her own business. She likes the geographical freedom. She doesn't want to ask for PTO. She wants to be able to travel and continue working as a freelancer. She enjoys making some extra money on top of her W-2. She's enjoying having that side gig and some extra cash. And lately, she started making good money. She just closed 5 clients and she's making $10,000 a month. And she's been thinking that she should create a set of books and records for this business. She should finally separate her side gig from herself, and decided to go on the route of a sole proprietor. She has a website, she got a business email, and she opened a bank account for this business. This is the first month that Olivia will be entering transactions into QuickBooks, so we can consider this as day 1 of her business, and we'll help her with this. Okay, so here we have the first month of Olivia copywriting business, where she's officially making this a sole proprietorship. She just got her QuickBooks account, and here it is. She has a logo. The name of the business is Olivia's Copywriting. She looks at the screen and thinks, what should I do next? And well, we need to enter all that has already happened in this month for her business. The first thing that Olivia did was to wire $1,000 from her personal bank account to the brand new bank account that she created. Looking at our debits and credits table, we know that cash is an asset, right? An asset is everything that a business owns. So cash, accounts receivables, inventory, if she has a computer, if she has a cell phone, everything that it's hers but business is an asset. We need to increase the amount of cash. So we need to debit cash, and we also need to increase shareholders' equity because this is Olivia's money going into the business. So we are increasing her equity. And again, equity is assets minus liability. It's the claim that the business owner, in this case Olivia, has on the assets of the business after all the liabilities have been paid. So if Olivia is wiring $1,000 into the business, she has a claim on this $1,000. They're not just missing and evaporating. It's her $1,000 after she pays for all the liabilities. So we will be booking $1,000, an increase in assets, debiting asset, and crediting an increase in owner's equity. let's do it. Opening QuickBooks, we are gonna come into this plus sign here that says new. There's a lot of options here, but we'll go into journal entry. A journal entry, it's that table. It's pretty much that same table that we just saw, where we will choose the account, and we have 5 categories of accounts. We have assets, liabilities, equity, income, and expenses to choose from. We have the debits and the credits and the description. So let's get going. Let's select today's date, and this is gonna be our first journal entry. The account that we are choosing is cash. We decided that we'll debit cash because we are increasing cash, and equity. We wanna know owner's equity. So owner's investments, it's an equity account, $1,000. Did you see that QuickBooks already booked $1,000? It kind of completed for me. That is because the system knows that we need to match this transaction. We need to match this journal entry. We need $1,000 on the left side and $1,000 on the right side. And that is why using an accounting software really helps, because the system is not gonna even let you save this if the transaction doesn't match. Whereas if you're recording your books using an Excel spreadsheet, which would be really difficult to recreate the statement of cash flows and a balance sheet, not impossible. Financial people do that all the time, especially if you're modeling for business valuation. Those guys and girls are rock stars and they model all this in Excel. But for you, using an accounting software, the software really assists you not to make a mistake. So I'm gonna just write in the description here, initial investment in both sides. I like to always have a description so you can click on the item after months and years and you know what it's for, and we're gonna save. So now we just booked our first journal entry, our first transaction. We want to know what was the effect of this. So we're going to go into reports and we're going to open the balance sheet. And now, as of September 26th, which is today, we can see that we have $1,000 in cash, we have $1,000 worth of an asset, and we also have $1,000 in owner's equity, owner's investment. And if we do our accounting equation, assets equals liabilities plus shareholders' equity. We don't have any liabilities, but total assets, $1,000, they match total liabilities and equity. So this is the accounting equation. If we think about the side of equity, what is equity? It's the owner's claim on the assets after all the liabilities have been paid. We don't have any liabilities here. So the equity, the owner's claim is the full $1,000. If Olivia wanted to rewire the money to herself right now, she could. She could wire $1,000 because there's no liabilities to be paid on the business. Another point about this first transaction is that we only touched balance sheet accounts. Assets, liabilities, and equities are balance sheet accounts, while income and expenses are profit and loss income statement accounts. Let's go back to the second account that we're gonna book right now. Olivia, she already invoiced $10,000 worth of her services to her clients, right? So let's imagine that the clients already Venmo her, and this money is already in this newly created bank account, her business bank account. So she doesn't have to create invoices inside of QuickBooks. She just needs to record something that already happened in the month of September. So we will take this $10,000. We are going to open a new journal entry and we are gonna book income, and we can choose here copywriting income, which is an account that I already created for this exercise. So now we wanna know in which side of our table do we book this income, right? Debits or credits? There's 2 ways you can do this. You can go back to the table and you can look at income, and you wanna increase income. You just increase $10,000 that Olivia made this month, right? So you credit that amount on the right side because that represents an increase in revenue. So let's try that. We're gonna credit revenue. And we also want to increase cash because this is revenue that she earned and now it's in the bank account. Someone already wired this to her bank account. So we will do cash, and QuickBooks would automatically put that on the debit side because again, the transaction needs to match. We can go back and see what increases our cash, which is an asset, is a debit. So it needs to be on the left side. We can book this and see the effect on our account. Now we have $11,000 worth in cash. We have $1,000 that Olivia wired to the account to fund the account with her shareholders' equity. And we have another $10,000 of income that was earned for this business in the month of September. We can open this account and see the detailed explanation for both of them. I'm just gonna click, and every time we click in the account with QuickBooks, we can edit it, right? So we can either reverse the account or we can edit the account. For the sake of this explanation, I'm gonna redo this transaction, but I'm gonna do that in the wrong way. Let's delete this, and let's say that we get to this point and we don't know if we should put income on debits or credits, right? So I'm just gonna take a guess. I'm just gonna say like, okay, I think this is debit. I'm gonna put $10,000 here, and I'm gonna do cash, and I'm gonna do $10,000 on the opposite side, and I'm gonna save. Now, when I look at our statements and I go back to the summary, I look at minus $9,000. That's clearly not right because she didn't pay anyone. She received that income, right? The reason why I'm showing you this is to demonstrate that you'll be able to catch mistakes in QuickBooks. Nothing is forever. If you work for a big corporation, they would say you'll never edit an account, you never delete an account, you will reverse and rebook. And yes, if you are in a big corporation, you're using GAAP, you have audited financial statements, you wouldn't do that. But my point here is don't be afraid of managing your own books. Don't be afraid of actually experimenting, just trying to manage your finances, because you can go back. At the end of the day, this is you recording, summarizing, and reporting financial information for your own sake. So we're gonna reverse this transaction that we did. So we're gonna edit for the second time now, and we're gonna put this on this side, and we're gonna put cash on the debit side, and we're just gonna write, you're gonna save it, and now we know that it's correct. We've looked at the balance sheet, but now we have income, and income is a profit and loss statement, is a income statement activity, right? Which is exciting because we can click in profit and loss, and now we see the entry being reflected here. We see $10,000 worth of income. Let's go to the final transaction that we'll book today, which is all the expenses that Olivia has incurred to run this business. We will book all those expenses in the same journal entry, and it's possible to do that because they were all incurred in the same period. They were all incurred in the month of September, right? Once we start booking expenses and revenue with an actual flow of your credit card and your flow of the bank account, because there's a way that we can connect your bank account and connect credit cards into QuickBooks, so we actually book them on the day that they're happening. We won't need to do journal entries anymore, but again, I'm going through journal entries to show you how the debits and credits work. So let's go and open the third journal entry of the day. This is going to be expenses, and in expenses, we need to increase expenses. So we're going to debit that because we incur the expenses, we increase the cost of the business, right? So we are going to debit all those amounts, and we are going to credit a liability because we paid all this with a credit card. We didn't take it out of the bank, which would be an asset, and we will be decreasing cash, so that's why it's a decrease. We are increasing a liability, which is a credit card, and then once the credit card statement comes, we need to pay the liability with cash. So let's take the first one. I'm gonna copy website domain. I'm gonna do apps. So software and apps is a sub-account of office expenses, and I am going to debit $18, and I'm gonna write in the description here website domain, and I'm gonna do that with all of them. Julia, why are we just not calculating how much is 18 plus 50 and booking $68 into one line item? We could. I prefer booking one by one, so we have the description of how much each of them cost. We're breaking it down, but you could just count how much everything is together into one line item, and that would be okay as well. So marketing ads, I'm gonna put in a separate account. I'm gonna put in advertising. And the total cost that Olivia incurred to run her business to make the $10,000 that she made this month was $323. This was paid via credit card. So I'm going to do a credit card, and I created a credit card account. And I always like to include the last 4 digits of a credit card or a bank account, because if you have more than one, it gets easier to set what is what, which is which account. And QuickBooks automatically pre-filled $323 into the credit side, and I'm just gonna write here And I'm gonna save this. Now, when we look at our profit and loss statement, we have costs. We have the $10,000 in revenue, but we also have $150 in advertising and marketing, and we have $173 into software and apps. When we double click, we see the description of all the software that we're using and what is inside of this 173, right? And your result of the month, Olivia's result of her copywriting side gig was $9,677. Now you're finished booking all your transactions for the month, and we will look how those transactions are flowing into the financial statements. We are currently looking at the profit and loss statement. So as soon as you book a transaction, it already comes to the right statement of profit and loss, and now you have your result. We can also look at the balance sheet, and we can see that on top of the $11,000 in cash that we had since the beginning, we now have $323 into a liability, a credit card liability, meaning that we borrow the money from the credit card company and we need to pay that. And now we see that the net income and the total liabilities and equity still match the total assets, but the total equity and the shareholders' equity have changed to 10,677 because the result is the claim that the owners have into the 11,000 minus the 323, and once they pay, they can have Olivia can have $9,677. There's one more financial statement for us to look, which is the statement of cash flow. And the statement of cash flow is divided into three parts. One of them is the operating activities, and we see that we have $9,677 with the adjustment of the credit card, and the net cash provided by operating activities was $10,000. And then the cash out of the 11,000 that we have, 1,000 was financing activities. It was owner's equity. It was money that Olivia put into this account. So to summarize what we just did today, we booked Olivia's first month of activities. We still didn't pay for her credit card, and I'm going to use that for the next video so we continue. We booked Olivia's first month of operation. We have a first view of September's income statement. We have a snapshot of the balance sheet, and we have our cash flow statement. We understood how to book the 5 categories, the accounts into debits and credit side. And now hopefully you can go into your own QuickBooks account, give it a try, and let me know in the comments if you are able to do it by yourself or if you need a review. I'll be so happy to know that you gave this a try and happy to know if this was helpful at all to you. So see you next time.